Welcome, everyone. Thanks for joining us. This is our Mackoul School class, No Insurance, No Entry, a guide to protecting your building when hiring contractors. The webinar today is being recorded, and we'll send out a copy of the recording a little later this week. One attendee will be selected to win a $50 Amazon gift card. We'll reach out to them later this week as well. The Q&A is open. Feel free to ask questions throughout the class. Presenting today are Ed Mackoul and Cheryl Fitzpatrick. Ed Mackoul is the CEO of Mackoul Risk Solutions and is responsible for running all facets of the business. As a certified insurance counselor and chartered property casualty underwriter, he has nearly 30 years of experience in insurance and risk management. Specializing in personal, commercial, business, real estate, and employee benefits, Mackoul Risk Solutions is recognized as one of the finest personal insurance agencies in the New York metropolitan area. We also have Cheryl Fitzpatrick presenting today. In her 34 years at Mackoul, Cheryl has developed many longstanding relationships with her clients while handling our larger, more complex accounts. As the director of operations for our construction division, Cheryl heads our contractor insurance review department and mentors our commercial line staff. She obtained her CPCU designation in 2015 and was named Outstanding CSR of the Year for the state of New York in 2020. Ed? That's it for me. Over to you.
Thank you, Kira. All right, so we designed this this class many years ago because the labor laws in New York, and the labor laws basically are laws that protect employees of workers, contractors, subcontractors. They're very onerous and unfriendly for a property owner and the property managers or general contractors. But this seminar is basically for property owners and property managers. And we're going to get into a little bit more. And it's not just New York based. The entire presentation is New York and New Jersey. But New York is one of the few states, if the only state, I believe, that actually has the burden on the property owners on any work-related incidents on their premises. So we're going to go into a couple of different ones right now. But the reason these labor laws are an issue is any claim related to them sits on the loss history, and it is a huge problem. Okay, so the insurance companies, when we have to remarket the insurance, they see a labor law claim, and it can really raise your insurance premiums. I'm going to say 500%, and you may end up paying a ton of money over 5 years because as long as they don't close out quickly and they sit on record, and every time the insurance is remarketed, the insurance company sees one of these, they see it's open, and it is a huge red flag and an issue for them. Now, there's really two labor laws that we're referring to in this presentation. The first one is Section 240-1. It's commonly known as the scaffold law, and it makes the property owner absolutely liable for all gravity-related construction accidents on their property with almost no exceptions. Okay, so what happens is if there is something that is height-related, scaffolding, ladder, anything along those lines, the property owner is held liable even if they did not hire the injured worker or his employer, even if they did not know they're working on their premises, even if the worker was partially fully responsible for their injury. I've seen claims where one employee knocked over a full paint can onto another employee's head. It dropped 2 stories, and naturally the guy who got hit was injured, and that was deemed the responsibility of the property owner. And that's part of the problem with these labor laws. Yes, they're there to protect the employees, but a lot of the times they are a huge problem for the property owner. So that is the one that is the most detrimental. The second one is Section 241-6. Makes property owners strictly and vicariously liable for worker injuries on their premises if improper or inadequate safety equipment causes a worker's injuries. Damages resulting from lawsuits can sometimes be reduced or eliminated if the property owner can show that the injured worker was partially or fully responsible for their injuries, but that is rare. But at least with this one, the insurance company has the ability to sometimes get out of it, transfer it, reduce it, etc. But it is still a problem. There's a lot of times where you will hear about these accidents and they are tragic, but someone may hook up their safety equipment incorrectly. And again, it still kind of gets held against the property owner. And even if it's something where the insurance company is able to transfer the risk, it drags on, and the defense costs become astronomical. And again, it sits on the loss history for many years. Cheryl, we're going to start with how do you manage the risk? And Cheryl's going to kind of go over a few of these in a minute, but the 4 main ways are insurance, okay, contracts, hold harmless agreements, which are typically inside the contracts, and proof of insurance. Cheryl, over to you.
Sure. Thanks, Ed. For insurance, never hire an uninsured contractor. Obtain a full copy of their policy. That means the full declaration pages with all the forms and endorsements. Have your insurance broker review the contractor's insurance policy to see if there's any endorsements or exclusions that should be removed or added.
I'm going to ask you a leading question right
Yep.
now, and I know the answer. So when a property manager or a board president comes to us and says, Ed, here's the certificate of insurance, how do we look? That is not sufficient, correct?
Certificate of insurance is just a piece of paper. It's just telling us the limits that they have and the carriers and then effective dates. It doesn't tell us anything about any exclusions that might be on the policy. So that's one of the, and some of the exclusions that you'll see are contractual liability. And if the contractor has this exclusion, you don't want to hire them.
What is the contractual liability? Well, all right. So it's, and I'm probably going to interrupt you a half a dozen times in every page because they just so we get the information out there.
Yeah.
Basically, when you have a contract, and correct me if I'm wrong here. So Cheryl heads our construction and our contract review department. And so that's her job really is to review everything that comes in and give the board or the property manager an idea of, okay, well, this guy has adequate coverage or they don't. And the contractual liability, and you correct me if I'm wrong here because you have more experience at this, is even if we have a contract, which we're going to get into after this, which details, okay, well, it's their responsibility to indemnify us. If they have this exclusion in their policy, it's going to do no good because they have a contractual liability exclusion in their policy, correct?
Yes.
Okay. Very good.
Some of the other exclusions are an injury to employee, a third-party action over exclusion. This will exclude any injuries to any employees. And what we like to do, what you want to do is be able to transfer it back to your contractor. However, if their policy excludes it, it's going to be on the building or property owner's policy. If a contractor gets injured on the premises, an employee of the general contractor or subcontractor, they can collect under workers' compensation, but they cannot sue their employer in most instances, but they can sue the property owner. Even though the contractor agrees to indemnify and hold the property owner harmless, since his coverage will not respond in this scenario, the building will ultimately be held responsible under New York Labor Law 240.
Right. So even if you do everything correctly, you have a contract, hold harmless, all this. If their policy has this exclusion, they're basically saying, "Oh, it's too bad. We don't cover an injury to our employee, and even though your contract says we're required to do so, we don't have the insurance coverage for it." So that is probably, if not the most detrimental exclusion, it's certainly one of them.
Yeah, I've also seen exclusions for exterior work. Designated operations, which are classifications where they might only be allowed to do interior carpentry and they're doing a roof. So they wouldn't have coverage for that. So that's what you want to look for. Height restrictions. Sometimes there's 3-story, 6-story exclusions, and they're working on a 9-story building. There wouldn't be any coverage. Multi-unit residential exclusions. I've seen exclusions for work in New York City boroughs when the job was located in New York City. Subcontractor warranties and hold harmless clauses that, if the subcontractor doesn't adhere to everything in this subcontractor warranty, there could be no coverage. Exterior insulation and finishing systems, that's an EFIS system on the building, and work on roof exclusions. That's just a few of them.
That is just a few. And a reason being, and again, correct me if I'm wrong here, Cheryl, is a lot of times they have exclusions. One, either they can't get them, or two, they don't want to pay for them. And
Yes.
the one we were talking about earlier, the third party action over, we
very
can look at
expensive.
it's exactly. We can look at a policy. If a contractor sends Cheryl a policy and the premium's $3,000, we don't even have to look at the policy. We know the policy is not providing coverage. What I usually tell people is if it's probably 5 times more expensive to have the third party action over coverage in it. So if it's $5,000 for the base policy, it might be $25,000 to have it with action over. And that's the reason sometimes some of the contractors may have it is they don't want to pay for it.
Correct.
What coverages should the contractor have, Cheryl?
General liability, you need 1 million per occurrence, 2 million aggregate, including products and completed operations, which is for defective product or faulty workmanship. A workers' compensation policy, which is required in New York State. The building owner is responsible if the contractor they hire does not maintain workers' compensation coverage. When the building owner's workers' compensation policy is audited, they'll be charged for payments made to the contractor if no certificate is maintained.
Right. So think about it. If you're paying a contractor to do a $100,000 job and they don't have workers' compensation, or then they don't supply you with a certificate, well, the building is now picking up the workers' compensation. Now the rate may be $12 per $100, and maybe $12,000 just in workers' comp premium they're picking up because the contractor didn't maintain it.
Yep. Auto liability for 1 million combined single limits, if any autos are owned. If not, they need hired non-owned auto should be maintained. And the commercial umbrella excess liability, this provides excess liability coverage over your general liability, workers' comp, and auto. The limits, and it provides additional limits in case the award is greater than the coverage on the underlying insurance. We typically see a $5 million commercial umbrella or excess on most projects, and a 10 million or higher when there's height-related jobs such as facade, roof repair, anything with the scaffolding.
And this is very, very important. So just to give a little history here, there's been more suits, these labor lawsuits that have pierced the umbrella over the last 5, 6, 7 years than the prior 40 years before it. And that's actually one of the reasons why the market is so bad now, is the umbrellas have been paying out a lot of these suits to injuries to contractors. And so there used to be 4 or 5 or 6 different umbrella programs for co-ops and condos and rental properties. There's like 2 these days because 3 of them have folded. 1 of them won't write in New York, another one. So it is a problem. So it is detrimental and extremely important to put this back on the contractor, and having extra insurance, that $5 million or the $10 million, is going to keep that off of your record, hopefully. Because again, with the loss history, all an insurance company has to do is see a $7 million lawsuit that was reserved to pay it out, and your insurance costs are going to be astronomical. Have a contract. All right. Well, first off, it's got to be drafted by an attorney, and it really kind of should be an attorney you're working with, and not a copy and paste. I can't tell you how many times we see a contract, and they get it in Word format, and then they got the property manager or the board trying to dummy it up. Have the attorney do it. All it takes is one word.
I've even seen the contractor draft it up. And sometimes the architect draft up the contracts, which sometimes does not make it in the building's favor.
No, and that's exactly right. The contract should be in the building's favor. And as Cheryl's just said, we see it where the contractor and his attorney send over a copy of the contract, and we've had insureds before we started this department who would sign it. So it's all of a sudden you're now giving them, the benefit. Your contract should detail the contractor's responsibility, including a written agreement with all subcontractors. You're probably not going to be able to deal directly with all these subs and get their insurance info and hold harmless agreements and contracts. So you want it to be in the contract with the general contractor. The indemnification language should be, again, in the property owner's favor, and we require that the owner be an additional insured under subcontractors' insurance policies. And this is critical here. Most contractors, their insurance policies have what's called automatic additional insured in it. Okay. And basically, let's rewind 20 years. If you wanted to be an additional insured on a contractor's insurance policy, you sent them a request. They sent the request to their insurance broker. Their insurance broker sent it to the insurance company. It cost $250. And the insurance broker would then send back an endorsement. And all of a sudden, ABC condo was listed as additional insured. Well, these days there are these endorsements that basically say, hey, we're going to name anyone you are required to name as an additional insured, but it's got to be something in writing or a written contract specifying such. So the contract between the property and the contractor has to specify the verbiage. that the contractor understands that they're required to name the building owner and the property manager as additional insured. Because if they don't, correct me if I'm wrong here, we've seen plenty of suits where they think they're an additional insured because they have a certificate saying such, but at the end of the day, there was nothing in writing stating it, and all of a sudden you're not an additional insured. And so now, instead of being able to transfer the risk back to the contractor, you and your insurance company are picking up this risk. And again, we're going to keep going back to the same thing because it's important. Your insurance costs are going to skyrocket when that happens.
And Ed, if I could just jump on that for just
Absolutely.
a second, to also make sure that that written contract is signed. Because without a signed written contract, they could negate to tender the claim back to the contractor's policy. We have seen that in the past.
Cheryl, we have a question that just popped up that said a lawyer for a bathroom renovation. So in instances, and a lot of what we're talking here is the building hiring contractors. Okay, and we are going to speak a little bit about the owners hiring the contractors, but it's a little bit more difficult to mandate and review what the shareholders or the owners are doing. Correct?
I also do see that a lot of the buildings have alteration agreements, which include these hold harmlesses within that the contractor has to sign, that they will name additional insured the building and the unit owner. So that's usually where I see their contract being drawn up. And it's
Right,
usually
perfect.
drawn up by an attorney for the building for any alteration work being done.
Very good. All right, who isn't insured? That's the contract should also indicate that. So as we had said, a lot of times the contractor's insurance policy says they'll name you as additional insured, but there's got to be a written contract requiring such, so that wording has to appear inside the contract. Specify minimum acceptable insurance coverages limits. Cheryl already indicated kind of what limits they should have, but the contract has got to have that as well. And we've seen situations where the insurance contract said they need to maintain insurance, but didn't give the types of insurance required and the limits required. And it was thrown out of court basically saying, well, there's no requirement. You just said they have to have insurance. So you want to make sure that it specifies the minimum acceptable limits that we indicated before, or that you've discussed with the attorney, and the limits as well. It should also have waiver of subrogation in it. Waiver of subrogation basically waives, the definition of waiver of subrogation is waives the right for one party to try and recoup the losses from another party if their insurance is already paid for it, or if they have insurance to pay for it. But we don't want that. We don't want to waive our right to go after the contractor. If the contractor causes damage or injury, we want to be able to go after them and subrogate at the end of the day if our insurance company pays for it. So the waiver of subrogation should be in the property owner's favor and not the contractor's favor. And again, if the contractor is drawing up their own contract, that's going to be in his favor, and that's going to be detrimental.
I've also seen it as a mutual waiver of subrogation, which also should not be the case.
Right, agreed. It should be in the property owner's favor. Then you got the contract should indicate primary and non-contributory. This requires that the contractor's policy must pay before other applicable policies, so they got to be primary, without seeking contribution from other policies, specifically to buildings, that also claim to be primary, which is non-contributory. So we want to say primary and non-contributory.
Ensure that all contracts and subcontracts explicitly state that all contractors and subcontractors are responsible for the supervision of their employees, for the means and methods of their own work, and for their safety of their own employees and/or subcontractors, employees of any tier. You don't want to be telling an employee of a subcontractor what to do, and then he gets injured. Then that means that you were giving him direction. Never allow a subcontractor on your policy, your property that you do not know or you don't have a certificate of insurance from. And while you interact with your contractors for scheduling or cosmetic issues, do not direct or control the means and methods of the contractor's work.
So you basically don't want to be their employer. You can hire them, and you can certainly discuss what they're going to do. What you don't want to be doing, as Cheryl said, is you don't want to dictate exactly, okay, you have to work 9 to 5. This is what you're doing today, because all of a sudden you're taking the employer role.
Hold harmless agreements, like we started to talk about them, should be in the contract. If not, have one separately, but have one. I have seen AIA agreements where they do a separate rider that just discusses the insurance agreements. They must be in the owner's favor, as we discussed. This is a sample hold harmless agreement. They should be reviewed by your own corporate attorney just for proper wording for your specific agreements.
Agreed. So basically what it's saying, Cheryl, and tell me if I'm wrong, tell me if I'm wrong here, is basically it's saying you are going to hold us harmless for any damage or injury that you cause because of your negligence. And that's really simple. So again, it's a very simple concept. It's difficult to transfer the risk, so you have to do everything possible to do so. And that was number 3 on the list of the hold harmless. We have a couple of questions here. The first one is, do you have model language which we can use, which would name us as additional insured? The answer is yes. Our contact info is going to appear on the screen later. Just send one of us an email and we will get you sample language. Another one is, if you have property policies, add property parties added as additional insureds, do you need endorsements CG? Well, it says G 20 times, CG 2010 and 2037.
Yes, you need both of them because one's just an additional insured endorsement, and then the 2037 is covering products and completed operations. So you should have both of those endorsements. But those endorsements, you got to be careful because some of them will require it in a written contract. So you can't just get the endorsement and think that you'll be covered. You also need to get a certificate of insurance. There's 2 portions of it. You have your regular certificate of insurance, and then you have the certificate of liability insurance addendum, which is a New York construction part of the certificate. So the certificate of insurance has to list the property owners and the property management as additional insured. Being an additional insured provides a defense and indemnifies the additional parties. And like we said before, but it can't just be on the certificate, it has to be required in a written contract. If possible, obtain the Accord 855, which is like a certificate of insurance on steroids. This provides additional information on the contractor's policy and some of their exclusions and/or limitations.
Let's just kind of reiterate what you had said earlier. And the way I explain it to our clients sometimes, the certificate of insurance is really just a snapshot on that date of the insurance coverage the contractor has. It really is, I say it's about as useful as a coaster most of the time. So, I mean, if you look at the bottom, someone say, well, I'm a certificate holder. Sarah, what does a certificate holder mean?
It just means that you begin being given information on their policies.
Exactly. It gives you no rights. It gives nothing to the policy whatsoever. It just means you are the holder of that certificate. So it does nothing. And so again, even if it says additional insured on here, you may not be. And we'll keep driving this point home because it is so important. And we see this a lot of times. That's the one thing that'll be missing is there has to be a written contract in place. Most of the time, I'm not going to say always. There may be times where you get an actual physical endorsement that says ABC condominium is additional insured. That's good. But again, most contractors have it where it says there must be a written contract. And you'll see that in the description operations. You were going to say something, Cheryl?
Yeah, and you'll also see, as I do these reviews, most of the certificates that come over now do state right in there that ABC condominium is listed as additional insured as per written contract or as per required in a written contract. So it's written right on the certificate now too, most of the time.
Agreed. And I've had property managers who come up to me and say, well, I want them to remove the words as per written contract. And I say, they're not going to. Right. I mean, because, there was a situation, I do remember this many years back, an insurance broker did not write those words on the certificate. And he came back, there was a lawsuit against him for his negligence for not putting that, because they're really should have been on there because the contract was required. So every insurance broker, for the most part, is probably going to be putting that in there. They're not going to remove it because that's what the additional insured endorsement basically says. And so again, this is just a snapshot on that day. And as Cheryl was saying before, it's great for an extent because it's going to give you the name of the company that the contract has. It's going to give you his limits, etc. And it's going to give you the broker's name in case you need to help file a claim. But you don't see any place on here which lists those exclusions Cheryl was talking about before. And that's the main reason you want to get a full copy of the insurance policy for the contractor.
This is the addendum Accord 855, which is the New York construction certificate. And this will list some additional insured endorsements that they may have. It may list some classifications that might be excluded on their policy. The contractual liability will be on there. Injury to employee exclusions will appear on there. However, I have seen that, insurance brokers have filled these out incorrectly, and I've gotten them and also gotten the policy, and it has contradicted it. So while getting this is good, getting the policy is the most definite form of making sure what coverages or exclusions that they do have.
Agreed. All right, Cheryl, we're going to stop here for a minute because we got several questions. So first one is a board responsible for the superintendent's lapse in judgment by allowing someone to conduct work in the building not cleared by the property manager? Say absolutely. I mean, again, you have to realize it's your building. And so what can happen here is, let's say he brings in someone, and this happens all the time. He brings in his cousin to help him do work. We've seen that cousin gets injured. It's basically an uninsured contractor. So the board and the property manager have control of the building. It is the building is the co-op or condo is the property owner of it. Again, if someone is injured there, they are going to sue, and it's going to be held against them. Next question, is a signed proposal roughly equivalent to a contract since it is most often used for jobs under $100,000?
No. Unless it has any kind of indemnification in it and insurance requirements. Usually a contract just has what they're doing, what kind of work they're doing, what kind of materials they're using, the price. And it's very often does not have indemnification, additional insured requirements, and insurance requirements.
All right, so in theory, could it be? The answer is yes, if you got that information in there. If you attached an addendum that had everything we're saying, it could be equivalent. But again, you have to get that at least from an insurance perspective, you have to get that information in there. Next question is, should we also require that they list the dates of the jobs to be worked? So should the certificate include the dates of the jobs?
I've never seen dates put on for the length of the job, because many times it doesn't start on time and it goes longer than expected. So I usually don't see that.
Agreed. Is there an 850? Is there an 855 form for New Jersey?
I don't think so. This is a New York construction.
I am not aware of one either. And the last one is, should we ask for a certificate of insurance addendums on New York construction for all GCs licensed in New York? Should they carry it? Well, the addendum is just filled out by their insurance broker. So we're talking about the Accord 855 here. I'm assuming when he says addendums, COI addendums on New York construction for all licensed GCs. If that's what you're referring to, the 855 is filled out by their insurance broker. It certainly should be. Would you say it should be completed and sent on all the time?
It should come with the certificate along with a full copy of the policy. It doesn't replace a full copy of the policy.
Agreed. It's better than a certificate because the broker for the contract has to answer all these questions, which gives more information than a basic certificate. But again, it doesn't give the information that the policy will. Next question, does the building staff need label or insurance if doing side jobs in the building? We're going to get to that in a little bit, so we're going to hold off on that question. This is what we were talking about. This is the CG 2010. If it lists someone in there, that box, that's great. Okay, well, again, if your name is indicated right there, you're in good shape. But some of the endorsements again are going to say by written contract.
And also, this is the
Which-
additional insured one, endorsement, but also the waiver of subrogation and primary non-contributory also have that, requirement that it's gotta be in a written contract.
Right. As you can see in the box here, there's no ABC condominium there. They're basically saying any person or organization where the named insured has agreed in a written contract or agreement to name as an additional insured, provided that the contract or agreement was executed prior to the loss of occurrence. So that's basically saying if you're going to be an additional insured, you better have a contract that was signed prior to the loss. All right, no side jobs. This is the question that we basically just got. So it was, does the building staff need labor or insurance if doing side jobs in the building? Well, here's the problem with them doing work in the building. Okay, first off, if they're not on, we'll call a co-op or condo time, they're technically not an employee. Okay, so it's like hiring an uninsured contractor. If they're injured, they can conceivably not be eligible for workers' compensation benefits as they weren't working on behalf of their employer. Well, then they may sue. Okay, well, the super is going to sue at that point because he can't collect workers' compensation benefits, and now it's an open labor law claim. If the super causes damage or injury to someone and is sued by the damaged party, they will not be covered by the property owner's general liability policy, as they were not an employee at the time. So under the general liability policy, under who is an insured section, employees are listed. So if, for example, the employee, the super is doing work on behalf of the condo and either causes damage or he causes an injury, he's technically an employee and has coverage under the who is an insured section. Once he is not working on their time and he's doing side jobs, he's not working for them any longer. So if he would have caused damage or he was caught injury and they're sued, there's not going to be any coverage under the liability policy. So yes, either the super or the employee should maintain their own insurance, or the work should be authorized and paid by the co-op or condo board. So if it's follow the money basically. So if the co-op or condo is paying the super at this point, he's technically working on behalf of the association at that point, and is considered an employee. If he is not, well, then he really should have his own insurance. And the truth is, he probably should have his own insurance, but a lot of them don't want to take it out because a lot of the times the minimum premium is somewhere along the lines of $5,000. And so they're probably not doing enough side jobs to offset a $5,000 policy. Now, this one is a real life example. A unit owner hired the building's porter to stain their floors. The porter put polyurethane in a sealed bag that exploded and caused the fire. Result, the building does not allow a super reporter to do these jobs any longer. This was kind of done under the table. The building sustained $500,000 in damages, nothing to subrogate against. And I can guarantee you they've paid dearly on their insurance premiums because of that.
What
Carol,
about
what about our handyman?
handyman? Minimal payroll workers' compensation policies. Primary for maintenance workers at a small building with no super. He or she comes once or twice a week to sweep, take out garbage. He or she gets paid by a check with no deductions made and gets issued a 1099 at the end of the year. Though this person's technically not an employee, the co-op or condominium should be maintaining a minimum payroll workers' compensation policy to protect themselves. But it doesn't, he won't have any general liability. So, the handyman has got to have a policy to cover his liability there. Use of equipment. Contractors are not to use the property owner's equipment, ladders, tools. We did have a case where the building lent the contractor a ladder and one of the rungs on the ladder broke, which then, said that the building was negligence for providing faulty equipment. So don't let them use any tools, ladders, or anything.
I mean, that is super important because at that point you have no defense. Okay, if the ladder is faulty and they fall in the range, there's really no defense for the insurance company at that point. And again, we're going to kind of go over it in the summary, but these labor law claims, which used to be smaller, I'll say, have just taken off over the last several years. And that what I had said earlier, I actually had lunch with the president of one of the insurance companies a couple of years back, and he said with their company, they've had more of these labor law claims that have exceeded the $1 million limit, the base limit in the liability policy. They've had more in like the last 5 years than in the prior 40 years of the company's history. So we're seeing more and more of this. And part of this is we call it social inflation. You have juries now who are more apt to throw money around, whether it's a distrust of property owners or insurance companies, or it's just a different generation at this point. These suits have kind of skyrocketed. And so contract related claims, what we want to do is we want them filed against the contractor's insurance, not the property owners or the shareholders. We want it going back to the contractor. The only way to do that really is to get all the information we talked about. It needs to be reviewed in advance. So again, in our agency, for our clients, Cheryl heads the contract review division. Anyone hiring, any of the prop buildings hiring a contractor, we want to see these things in advance. We review it for you. So it's copy the policy. We want to see the certificate of insurance. We want to see the contract and the hold harmless. What Cheryl does, she takes this all and kind of does a review. Actually, Cheryl, why don't you tell exactly what you do with these reviews?
Okay, the first thing I do is I look over their policy and their certificate, and I look for any endorsements that I think, or exclusions that I think could affect the property and the building. And there might be someone there, like they have a roofing exclusion, but that contract is not doing roof. That's okay. But if they are doing anything on the roof, you want to know that they don't have coverage for that. So I'll point out, the policy, the effective dates, because that's really important, because if the policy is going to expire in the middle of a job, you want to know to get the renewal before it expires, so that they can continue working there. I do point out any of these exclusions. I look at the hold harmless agreement to make sure that the contractor's limits and what's required in the hold harmless agreement match, that they have indemnification, that they have the primary non-contributory waiver of subrogation in there, and that the certificates that they receive include the building and the property manager as additional insured.
Very good. So, and this is not something we discussed before, so I'm going to put you on the spot here. Out of all the reviews you do, how many would you say are perfect on the first time you see them and say, oh, hire him, he's perfect?
Usually not many. There's a lot of back and forth, because there's usually a contractor might have something on his policy that now he wants to figure out, well, what can he do to make it, to correct it. So we'll go back and forth and, with the contractor on working to get that policy corrected. Or sometimes the policy is just got so many exclusions. It's just, it's time to find another contractor. And a lot of times that happens. They can't afford to add that injury to employee, coverage on their policy. It's not worth it for the job, that they end up getting another contractor. And then the other contractor usually has, the right coverages.
So would you say majority of the time you have to go back and forth, more than half?
Yes. And it's usually and sometimes it's just tweaking some things, tweaking the hold harmless agreement, tweaking the certificates, maybe, taking one of the exclusions off of the policy. So, but it is back and forth just to make sure everything's in order.
Okay, that's the reason why you should have your broker really involved when you're hiring a contractor. Because again, if it's half the time, well, that means that is a problem could be a problem half the time. Back to the summary here, less exposure to the building. If we're able to transfer the risk to the contractor, that improves your claim history, okay? And improving claim history equals lower insurance costs, and the savings could be significant. I always say the single biggest reason why insurance premiums increase are claims, okay? By far the biggest reason. So either two things happen. One, the insurance company says, all right, listen, we paid out too much money, we're going to raise our rates. Or they say, we've paid out too much money, you're a bad risk, we're getting off the risk. And once they non-renew the insurance coverage at the end of the year, well, now when we go out to remarket, we have to take the loss history and the non-renewal. And one of the questions on the application says, has there been a non-renewal? And we have to answer that honestly. The answer is yes. Once they see that, it's a flag. They're looking at the loss history. So anytime, no matter what market we're in, we have to show loss history. Sometimes it's 3 years, sometimes it's 5, sometimes it's 10. They want to see loss history. If they see claims on it, it's a problem. If they see one of these labor law claims, it's a huge problem. If they see one of these labor law claims that are still open, meaning it hasn't been paid, closed, it's a tremendous problem, and you will be paying more money. We'll give one quick example. There was a claim several years back, and I always use this one because it was a small job. It was a $625 job. They had some water damage in the roof, and although it was fixed, they wanted to scrape and paint it. So they hired someone to come in, $625, scrape and paint it. He was scraping, couldn't reach, stood on a paint can, still couldn't reach, put a second paint can on the first paint can and fell. Okay. And there was some serious injury to him because he smashed his head. It ended up, long story short, being over a $4 million claim. And so for a $625 job, the insurance company paid out $4 million, and the insurance premiums went from $50,000 to $250,000, and that lasted for about, if I remember correctly, somewhere along the lines of 4 or 5 years. So that one building paid in excess of $1 million extra in insurance premiums because they didn't have the ability to transfer the risk because they hired an uninsured contractor. And now again, the insurance company will now know the property owner is hiring uninsured contractors, and probably will not want to insure them. And that's one of the problems with the labor law claims being on the loss history. The other insurance companies go, whoa, nope, we don't want any part of this, because again, those are the single biggest claims that insurance companies see. There's one question here, but I also have a question for you, Cheryl. You also manage accounts. So are more and more, I believe, insurance companies are starting to require forms to be signed before binding coverage, correct? And tell us a
Yes.
little bit about those
They want to
forms.
know that they are doing the proper risk transfer, that they have a hold harmless in place, that they're getting certificates, and they want them to sign off that they're doing this risk transfer before they want to get on the risk.
Okay, so we're teaching it here, but the insurance companies are also sending out their own information now, and there's a couple of them basically who are very diligent about this. There's one, the president of one of the insurance programs. She reviews these policies herself. It's so detrimental that she's down in the trenches and she requires copies, and they send out a form and says, "Do you plan on doing any work this year?" And if the answer is yes, they want copies of those policies and all this information, and they review it. And if it isn't sufficient, they will not provide insurance quotes for the building. So it's getting to a point where this has become absolutely detrimental. And because, again, with all these claims being paid out, insurance rates are going to continue to skyrocket unless we get a hold on it. So this is the stuff you want to do to make sure that you're a good risk. And we do have another question. Cheryl says, is there a cost of Mackoul reviewing contractor insurance policies? We do it for our current clients. So if it's a current client and the board is hiring contractor, there is no cost to do it. It's a complimentary service for our clients. We cannot do it for for people who aren't our clients, simply because our insurance policy will not cover it if we're doing it for someone else. But for our current clients, we do. We don't do a full review for the shareholders or unit owners in the building. And I just kind of want to get into that for a second. We don't do it for them. We will do it as we charge a fee, but we simply can't do it for the owners because the owners may go out and hire 4 contractors, and you may have 100 units in the building. We simply can't be doing 400 reviews for one building. But if it is something where that they want us to do so, for as long as it is a building we insure, we will do the owners for a small fee. But Cheryl, I want to ask you one other question, because it was something that was kind of asked earlier. We were talking about the alteration agreement. What should an owner who's hiring a contractor, what should they have?
They should have pretty much the same information. They should get the policies, they should get the certificates. They need, a hold harmless, or like we said, the alteration agreement will have it in there. And that also has to include the building, because if they're, it has to be a 3-way contract or alteration agreement that includes the contractor, the unit owner, and the building. Because if just the unit owner and the contractor have the contract, the building's not having anything in a written contract to provide that additional insured status. So that's why, you have to have a certain hold harmless agreement that also includes that.
Right, and we have seen suits, and it's more it's a little bit more important in co-ops than condos because in co-ops, you don't own your unit. We've seen contractors get injured inside the unit that were hired by the shareholder, and the building is still held responsible and is sued. So, and that's the reason. And that's exactly what we need to put out there is when exactly what you said, when a shareholder or a unit owner is hiring someone, same thing needs to be done. There's got to be something in writing because, again, we want to trigger the additional insured, and it may be something that's required in writing. So I don't see any more questions. I want to thank everybody for attending. Cheryl, thank you for being my partner on this. If you have any questions, our emails are on the screen. I know someone asked for the verbiage. If you email one of us, we will get it to you. And whoop, looks like we might have one more. Nope. Okay, good. That was it. No more questions. Thank you, everyone.